Welcome back to this shares edition of Your Money, Your Call. Do hope you're enjoying the program so far. Gentlemen, one company that most certainly has been on your radar, and it's the subject of an email that I'd like to go to from Brendan from Brisbane.
Without notice?
No, it's okay. Rio.
Right.
Having bought Rio at $122 in 2007 and picking up more stock through the rights issue, giving an average price of $80, Brendan asks, how do you see their price heading in the future? Is it likely to go back over $100? Right, Rio's currently at $71.65. Looks like Brendan's bought at the peak at $122, but he's also picked up that extra stock he's been talking about. So on average, he's paid about $80, but he's still sitting on losses, although not as bad, of course, as he would have been around March this year. Okay, Roger.
Well, it's interesting. People often buy companies if they pay too high a price and they buy more at a lower price, you know, it brings down their average, and so they wait for it to come back to that break-even point. But you know, you could have kept your shares in Rio and bought shares in anything that went up a lot more, and the same effect would have happened. You would have had the same effect on your portfolio. I can't tell you with any degree of confidence what the share price is going to do. I'm no good at forecasting share prices. I know you have some people here on the show that do that for a living. That's not what I do. I can tell you what I think the business is worth. And when I look at Rio, my 2009 valuation has been $43.40, 2010 $50.75, and 2011 $57.80. Now, the share price is already above that. Why? Well, I don't know. BHP is a much better business than Rio in terms of its debt levels, in terms of the levels of intangibles. It has a lot less. Its return on equity is higher. It earns more profit with less capital. It's just on so many fronts and so many metrics, BHP is a better business than Rio. So the price premium that you see today is really, in my mind, unjustified by the economics of this particular business. And I don't see the value catching up to the price in the next couple of years. That could all change, of course, with commodity prices. If commodity prices double from here, well, all bets are off and the values all change. And that's the issue with commodity businesses. Their return on equity is largely dependent on the commodity prices, and very few people can forecast those things accurately.
Yeah, it's an interesting one because there's quite a significant difference between your forecasts and...
Look, that has happened in the past. You know, when Telstra was at $9, I had a valuation of $3, and everyone thought I was a lunatic.
Well, you're not that much of a lunatic,
well,
quite
now,
clearly.
But you know, it took 10 years to get there. You know, so the reality is, over long periods of time, the market tends to get it right. And if the value for Rio doesn't pick up significantly, then ultimately the price will come back.
Let's go straight to our next caller. It's Ted on the Sunshine Coast. Hi, Ted.
Hi.
Hi. What's your question tonight for my panel?
Well, I'm relatively new to online trading and accidentally bought some Caltex shares a couple of weeks ago.
You accidentally? How did you do that?
Click the wrong button.
How do you accidentally buy something?
I got distracted while I was cancelling an order.
I can't hear.
No, I think you said you got distracted. I think I've got a bad line there. Ted, can you hear me?
Yes, I can hear you.
Oh, that's better. Go ahead. So how do you accidentally buy a stock, Ted?
I got distracted while I was playing around with orders and forgot to go back and cancel it.
Yes, that can happen. Very dangerous.
Must concentrate, Ted.
When money's involved, you have to concentrate, Ted.
Okay.
Mate, I can talk to you about Caltex. I've got a fair bit of... I've been writing a blog in between coming on your program, and I've just written...
With all your spare time.
Yeah, well, correct, you know, when I'm not swimming with the kids. And so I've spent a bit of time on Caltex. Now, Caltex is a really, really difficult business to value. I've had some people write to me and write comments in the blog. And if people want to go to the blog, just go to the rogermontgomery.com website and there'll be a link. They'll be able to find it. I don't know the address of the blog. Sorry. But
not quite a lunatic?
No. So it's called Roger Montgomery Insights. Anyway, so I've had some people write to me and they've said they bought it at $12 or $13. They bought it at $11 and $10. My best guess and it really is dependent on the Singapore refiner's margin. And when you look at what goes into actually determining that price, it's really, really difficult to forecast. And I talk about that. But my best guess is about $8, $8.30. That's the valuation.
That's fair value then, because that's what it's sitting at, $8.30.
But that's optimistic. You know, that's not. There's no room for error at that point. Yeah. And that's my value for Caltex. So I'm very sorry, Ted, that you've bought it at I don't know what price you've bought it at, but obviously you say it was a few weeks ago, so it's at a higher price. It is about what I think optimistically it's worth. But when you go to the blog and you have a look at all of the factors, I've listed all the things that determine the return on equity for Caltex, you'll just think, gosh, how can you come up with a valuation for that?
That one. We're going now to Ethan from Adelaide. Thanks for waiting, Ethan.
Good evening, panel. What your thought on a company called Roc Oil for long-term stock, and is it a good time to buy now?
Okay, Roc Oil is the company, and I think that ROC is the code there. Currently at around about the sort of 65-70 cent mark by the looks of it.
Yep, I can comment on that. You want to go first?
No, I don't know anything about it. Don't follow Roc Oil at all.
Well, I'm happy to report. I'm getting used to this, Nina. I'm sort of anticipating some of the stocks that people might want to know about. I've got a valuation 09, 53 cents, 2010, 64 cents, 2011, 70 cents.
Okay, well, it's 68.
So it's 68. So it's about right. Well, in fact, if you bought it today, you're going to be waiting 18 months for the value to catch up to the price. So there's really not a lot in it.
Yep. Guys.